Hello again, everyone. Today, our presenters, David Kruse, Steele Hutto, and Christopher Cannaley, will lead a discussion about staying protected in the cyber insurance landscape. The recorded version of this webinar will be available following the completion of this session. You can look for a link to the recording and the slide deck for reference emailed to the email you registered with in the coming days. Now I'll pass it over to Briggs to begin.
Thanks, Catherine. Appreciate the little intro there. Thanks for everyone for jumping on here, for joining us. This is our monthly webinar series that we've been doing at Shepherd Insurance. Obviously, it's our 10th one for 2023. We're doing the topic of cybersecurity and how to navigate cybersecurity in the cyber insurance market. Thank you for joining, whether you're a client, whether you're a prospect, whether you're an employee. Obviously, we appreciate your business and we appreciate your time. Thank you for taking a little bit of your time to spend it with myself and our panelists today. We're really excited about bringing you guys some great information about the cyber market and how you guys can become more secure with your IT firm and everything that you guys do on the IT and cybersecurity side. So as far as why we're here, that's it. It's Cybersecurity Awareness Month in October. We want to help educate our clients, educate our prospects, help you guys mitigate risk and protect your assets. Talk about being proactive as far as planning and incident response. That way, whenever you have that rainy day, have that claim, whenever you need to take action, that you're prepared for that, and also just improve your insurability. How do you make yourself more insurable as you're trying to purchase cyber coverage? So that's the main purpose of today. As far as an agenda, we're going to talk about some intros. I'll let our panelists introduce themselves here in a minute. We're going to explore some predetermined topics that we set aside, and then we'll answer some questions that you may have for us. And then we'll have a few takeaways and calls to action. So introductions, I'm going to start off here. I'm going to be the moderator today. Myself, Briggs Orsbon. I'm the president of commercial lines at Shepherd Insurance. I'm also on our executive team. I've been with the agency for 12 years now. I oversee anything commercial. That includes our programs, our niches. Cyber insurance isn't included in that. So I'm going to pass it off to, I believe, David. I think you're up next.
Yeah, thank you so much, Briggs, and thanks everybody for joining us here today. My name is David Kruse. I'm the Director of Insurance Alliances at Arctic Wolf. We are a security operations and cyber incident response firm based out of Eden Prairie, Minnesota. I actually live in Madison, Wisconsin, so we're just a bunch of folks that live up in the snow up north here. So it's good to be connected with everybody on here today. I spent about 6 years actually in Briggs's shoes, actually as a cyber insurance agent with an agency up here in Wisconsin. So sort of cut my teeth in that area, and I still think of myself as an insurance professional that just kind of happens to work at a security company. So at Arctic Wolf, we do the whole soup to nuts cybersecurity landscape, from monitoring for potential incidences and pre-incident work for our clients, and on the post-incident side, after say a ransomware attack has taken place, we'll help you do an investigation, rebuild your systems, negotiate the demands with the threat actor, things of that nature. So we'll get into this, and we'll have some more stories along the way, because you don't do incident response and not pick up a couple of those while you're doing it. So thanks for joining us.
Thanks, David. Thanks, Briggs. Thanks, everybody, for joining. I'm Steele Hutto, a senior broker at Burns Wilcox Brokerage. We're a wholesale insurance broker that partners with retail agencies like Shepherd. They're a very good partner of ours, so really happy to be on here. Been in the business since 2008, got my degree in insurance and risk management, master's in business administration from Vanderbilt. Spent my first 6 years on the carrier side underwriting cyber liability insurance. Briefly spent about 4 years on the retail side at large brokerage, selling cyber and D&O and other specialized professional products, and then have been a wholesale broker for 6 years now, 4 of which at Burns and Wilcox. So happy to be here.
Good morning, everybody. I'm Christopher Cannaley, Managing Director of our executive liability teams in Indianapolis and Cincinnati. I've been with Travelers for about 12 years and I've been underwriting cyber insurance that entire time. As Briggs mentioned, it's kind of perfect timing for this conversation since it's Cybersecurity Month, and every year in the fall, Travelers sends out a survey to our commercial insureds to kind of see and get a feel for what their biggest business concerns are. This year, among all concerns, including things like cost inflation, economic uncertainty, access to capital, cyber risk actually showed up as number 3 on the list. So this is a timely topic, a relevant topic for all businesses, regardless of industry. And I'm excited to get to spend some time with you this morning chatting about cybersecurity.
Thanks, guys. I'll just spend one second here on this slide. I think this is kind of a neat slide with our logos all presented here. Obviously, I appreciate David, Chris, and Steele all taking some of their time today to spend it with me and you. Arctic Wolf, Burns, and Travelers are all partners of Shepherd Insurance. We're all advocates, and we're all here to advise and help and protect each of your businesses. So keep us in mind. We want to be an extension of your team. We want to help protect you guys and your assets. And so don't be afraid to lean on us. And I kind of look at this slide, and it looks like a shield to me. And that's a good symbol of protection. And so that's why I thought I wanted to include that here today. So we're gonna get started. We're gonna jump into some predetermined topics. The first one of those is gonna be the state of the market. So I'm gonna kick this first question over to Steele and Chris. Steele, why don't you lead us off? What's the state of the cyber insurance market as a whole? What is it like today, and what is it now?
Yeah, I'll start with what it was like. So back in 2008, when I first started, it was just very much a buyer's market, but we had fewer carriers writing it. We didn't really know how to price it. The prices were all over the place. We really just rated off of revenues. We'd ask questions like antivirus software, firewall, encryption maybe, but we really weren't, we were underwriting to it, but we really didn't know what we were doing. Fast forward to about 2015, new entrants in the market. Everybody's moving from carrier to carrier, copying each other's forms. InsurTech started. So, and the claims and ransomware and social engineering and all that stuff started. So I'd say in about 2017 is when I started seeing a bunch of large ransomware claims like hit our book that we were handling. And Beasley and AIG used to have huge market shares back then. They started to tighten up a little bit. Fast forward to COVID, and that's when it really hit. Carriers pulling out, people losing their capacities at these insurtechs, requiring minimum controls. You saw about 150% rate increases. And then today, you're seeing, it's not soft market by any means, but they're pulling back on some of the questions in certain cases. But you really need to have MFA at a minimum and EDR, and we'll talk through that later. But I'd say it's kind of stabilized a lot right now, but it's still certain classes like utilities and higher education and municipalities are seeing a little bit more. But we're starting to see rate decreases right now because I think the pricing is kind of stabilized.
Chris, any thoughts on where the market was and where it is now?
Yeah, I think I would echo everything Steele said there. As I think back to writing this coverage back in 2000, 2011, 2012, at the time we were probably primarily concerned with organizations that collected a lot of personally identifiable information or were accepting credit cards as payment. That seemed to be the thing that the bad guys were after at the time. But because breach activity became so common, and probably all of us on the webinar here today were impacted by the Equifax breach several years ago, our data and our information has lost a little value, I think, for the bad guys. So as Steele said, they sort of shifted gears and started looking for ways to exploit their ability to execute ransomware schemes. Social engineering fraud started to pop up a lot more during that time as well. And that definitely changed things. As Steele mentioned, we started to see those amounts go from really just kind of small nuisance amounts, $5,000, $10,000, up into the 7 and even 8-figure range, which left carriers in a predicament, around 2019, 2020. We're certainly in a much better place now, as Steele alluded to. MFA has been a huge game changer just in terms of reducing both the severity and the frequency of claim activity. And for the first time in a couple years, we have some pricing flexibility again, and are seeing losses go down.
Thanks, Chris. The next question, where can you get cyber insurance? So I'll take that one real quickly. Obviously, Shepherd Insurance is an independent agency. That's one of the best ways to obtain cyber insurance coverage. We are writing policies both on a monoline standalone basis, but then also we can provide cyber insurance through some of your package policies, depending on what carrier you're with. Obviously, there's hundreds of carriers that are offering cyber insurance, and we've got access to a lot of those. Other times we're accessing markets through brokers and wholesalers like Steele at Burns and Wilcox. So reach out to Shepherd Insurance for assistance, or even just reviewing your current coverage. And that's the next kind of bullet point here is my P&C insurance enough? That's something we can help with as far as benchmarking to make sure you've got the right insurance amount on your cyber. I don't know if there's a specific right answer on that or not, but David, can you maybe help us a little bit more with that?
Yeah, there is a specific right answer, Briggs, and the answer is more than you probably purchase right now. That's the right amount. And I'm not just being coy when I say that. If you aren't purchasing a standalone cyber insurance policy that's been underwritten specifically to cover just that set of risks, you're putting yourself at a disadvantage. Oftentimes carriers will include some cyber coverage in a package policy, and if you've gone through the effort to maybe buy up some coverage or add additional cyber coverage on a package policy to get it to maybe a $500,000 or $1 million level, then we're in a more reasonable place. But if we're relying on maybe just an endorsement to a property policy or a general liability policy that might be $25,000 in coverage or $50,000 in coverage, I can tell you right now, as somebody who works I work in the mess cleanup business. That's what incident response is. These are not inexpensive messes to clean up. I can promise you that. So we can show you what we sort of mean by that. Catherine, if you want to keep moving here. So when we look at the attacks that we see, right now, the most common, most prevalent type of attack we see is a ransomware attack. For those of you that aren't familiar with the term, it's a hacker who gets access to your network, and they essentially encrypt or put a very long password on critical files within your network, and it essentially brings your entire business to a standstill until you are either able to recover from a backup, or B, forced to pay the hacker a ransom, usually in some kind of cryptocurrency like Bitcoin, to actually purchase the key to unlock your systems. Like Chris alluded to earlier, back in 2014, 15, 16, hackers are maybe asking for $3,000, $4,000. We regularly are seeing ransom demands well north of 7 figures, and we will negotiate those down to a more reasonable amount. But if the ransom demand is $5 million to start with, and we negotiate it down by 80%, that's still $1 million ransom payment that's getting paid. And if that's something that you don't have insured, that money's coming out of your pocket if you're choosing to purchase that decryption key to get your systems back up and running again. So we don't ever want a client to be in a position where they have to pay that ransom. We would much rather have you have good backups, identify the attack before it actually gets to the point where it locks up your system. But in any event, if you get to that point, you want to make sure that you've got a healthy risk transfer mechanism, a healthy insurance policy in place to take care of that. When we look at what causes these ransomware attacks, there's sort of a misconception out there, and you see it a lot if you're on, LinkedIn, or if you're like watching the news and you hear about, the MGM attack. That's kind of the big one that everybody's talking about right now. They got hit with a ransomware attack, and it was because an employee picked up the phone and was tricked into letting a bad guy into the network. That kind of thing does happen, but what actually happened in that case is exceptionally rare for a ransomware attack. If a ransomware attack is going to happen, it's because a threat actor or a hacker is going to target the external perimeter of your network, your firewalls, maybe servers or computers that are facing the internet, and they're going to attack those machines directly using vulnerabilities that they know how to compromise. So when you think about how we work to prevent some of these attacks, yes, we want to train our employees. We want to make sure people aren't clicking on links that they shouldn't, or opening attachments in emails that might be infected. We want to do all that. But really, if we want to avoid the most pernicious cyber insurance claims driver, really we need to focus on how do we arm your IT teams with the ability to identify risks in your external network that threat actors are able to scan for and compromise. Our data year over year shows that external exposure issues like that are, it oscillates between about 65% and 80% of all the ransomware attacks we work are from some sort of an external issue like that. A little later on, we'll talk about some tools that Shepherd provides to help you avoid those sorts of issues, but worth looking at, the most common cause of the most common type of cyber insurance claim, and that's ransomware driven by external exposure issues like this.
Thanks, David.
You're gonna have to
That's
stop.
a good.
I'll eat up the whole hour if you let me. So
that's all right. That's a good lead into cybersecurity requirements. So, Steele, I'm going to lead off with you again. What's currently being required out there? What are carriers looking for as far as cybersecurity within our insurance?
Yeah, I mean, at a minimum now, you're looking at MFA, multi-factor authentication, which is just, instead of a username and a password, it's a second means to verify. A lot of times you'll get a code on your cell phone. There's other ways to do it, but it's just a second level to verify your identity. They want it on remote access, email, administrative privilege access at a minimum, EDR, endpoint detection and response. We'll talk about what these are in a little bit. Phishing training, training for your employees. I think that's very underrated. A lot of these events are caused by lack of employees understanding what some of these phishing attacks are. So the human element causes a lot of these claims, and I think that's very important and easier to implement than some. Obviously, your antivirus software and encryption from 2008 that they were asking for. But those are the main items. I mean, backups, patches, as you get larger and more sophisticated in certain industries, obviously there's others, but for the average insured, those are what they're looking for.
Thanks, Steele. David, do you want to speak to any of those terms or help elaborate on those definitions as far as those requirements go at all?
Totally, yeah. It's real easy to get lost in the alphabet soup of cybersecurity controls here. So let's kind of walk through what some of these basic fundamental things are. I don't know of any cyber insurance policy that I'd actually want to buy that doesn't require things like MFA, EDR, incident response planning, things like that. So if we can identify at least those three core terms, and if you understand them and implement them, you'll be well on your way to getting cyber insurance that's worth the money that you'll pay for it. So what is multi-factor authentication? To define what MFA is, it's almost easier to define it by saying why it's needed and what circumstances drive the need for it. So any system that we log into, we have a username and we've got a password. We're all obviously very familiar with that, whether it's our online banking, whether it's our work email, whether it's our accounting system, whatever it is. We log in with a username and password. Hackers are very good at guessing what those passwords might be. And we human beings are honestly a little lazy sometimes. Oftentimes we'll use the same password for like 4 or 5 or 6 or 20 systems. And if for example, there's a golf course down the road that I golf at once every like 5 years, but to get a tee time, I have to have a username and password to book my tee time at this rinky-dink little golf course. So if that golf course gets hacked and my password gets compromised because that golf course was hacked, if I reused that password here at work, then all of a sudden a hacker could find my work system, use that same password that I recycled, and then log into my work system that way. So that's the risk that MFA is designed to prevent. And what MFA does is it combines something you know, which is your password, with something you have, which is your cell phone, which is a text message or an app on your phone that delivers a 6-digit code that you then punch in to further authenticate that it is indeed you, the approved user, and not a hacker that's trying to get access to the network. So it just adds a third layer of authentication to that whole process so that only you and only you can log into that system. EDR is a fun one to talk about. This is a really interesting control here. So we probably all have heard the term antivirus before. A lot of us probably have antivirus on our home computers. And we all generally probably know what it does. It's a piece of software you install on your computer that looks for viruses or malware or anything that shouldn't be on that device. And it blocks it, it deletes the file, pulls it off the computer so that it can't infect your device any further. EDR is the next evolution of that sort of idea. So walk with me here and imagine that you have 2 detectives at a police precinct. Antivirus is the detective that looks at all 10 most wanted posters on the wall and then goes and looks for all 10 criminals whose images match the posters on the precinct wall. So they're just looking for those 10 criminals. What EDR does, EDR is the second detective. They not only look for those criminals in the picture, they also read about what the criminals did and catch anybody that's exhibiting criminal behavior, even if they're not one of those 10 people on the wall. They're still going to look for those 10, but they're going to look for anybody else that's doing the types of things that get you put on that wall in the first place. So that's sort of the key distinction, is we're not just looking for things that we know are bad, we're looking for activities and processes that we know are bad as well. So it kind of builds off that idea of antivirus to something a bit more broad that we are able to identify and stop before a malicious file gets put on a computer. The last one we'll talk about is an incident response plan. Most businesses probably have some kind of maybe a disaster recovery plan or a business continuity plan. If the main plant burns down, how are we going to build our widgets? If the office is flooded, how are we going to access records? We probably have something similar to that. An incident response plan really is just that concept specifically for a cybersecurity incident. If we walk in on a Monday morning and the CFO reads a ransom note on their computer, what do? What's the first step that we take? What information should we have at the ready to make sure we minimize the cost and time impact of that event? So an incident response plan is going to walk you through documenting who the internal and external team is. What key service providers do you need to have documented with their contact information so you can get them 24 hours a day? What key systems are you running in what order? What critical business functions do you have and what order should they be restored in? Things of that nature that you can think through before the incident happens, so that when the incident happens, you actually have a playbook that you can work from, and you're not just running around trying to figure out what's going on with no plan at all. We've worked thousands and thousands of ransomware cases over here, and there's a marked difference in how successful that case is if the client has a defined incident response team and a defined incident response plan. It's really one of the best things you can do to make sure that, okay, if you have something happens, you can be resilient through that incident.
Mm-hmm. Thanks, David. Chris, you've got a unique perspective. Obviously, you sit on the carrier side. You have any thoughts on why carriers are requiring these types of cybersecurity within systems?
Yeah, I think maybe just to build a little bit on the themes that Steele and David have discussed. MFA has proven to be, to this point, about as close as a silver bullet as we've had to reducing the likelihood of having something happen. Microsoft has said that MFA can help reduce these types of claims by up to 99%. Our own claim experience sort of lends some credence to that as well. Of the hundreds of ransomware claims we paid back in 2020 before MFA became a requirement for coverage, only about 3% of our insureds actually had MFA deployed. And in those cases, it may not have necessarily been deployed across their entire network, which I think Steele alluded to as well. It's important to have it for email, for remote access, for administrative access. You can almost think about your system, exactly, yeah, especially for backups. You can almost think of your system similar to your house. If you leave your house to go shopping and you close the garage door, but you leave the front door wide open, you've left a way for the bad guys to get in and rob you blind. So yeah, MFA is critical and is really a minimum requirement for most carriers these days. I think to perhaps add a little bit to the commentary on the importance of an incident response plan, we found through our claims experience that companies that have a robust plan in place get through a claim much quicker at much less cost, and they're able to get back to the business of their business much faster than if they're not sure how to respond if something were to happen. So I'd say especially for businesses that that manufacture something, that make something, having a good robust plan in place is critical. Maybe just one more thing too, the bad guys have gotten good, and we found that on average they will have been in one of our insured systems for weeks, if not months, before they finally decide to execute whatever scheme it is they want to do, so they can be compromising backups, as David mentioned. They can be, collecting personal information. They can try to execute social engineering fraud schemes before they finally ever decide to pull the plug and demand a ransom. So, like I said, they've gotten very good, and as a result, claims when they do occur have gotten very, very expensive.
We had an incident, Chris, once where we were working a case for a public utility, and the furthest the evidence of compromise went back was 5 years. The threat actor spent 5 years in their network before actually deploying any ransomware, which is just, I mean, that's easily the law, like by orders of magnitude, the longest we ever saw. But threat actors play the long game. That's not they're not usually smash and grab operations. It's okay, how can I get into the network? How can I extract as much data, so as much valuable data from this network as I can? Usually by the time the ransomware hits, that's the very last step of the hack. Once they've done that, they're done hacking. They've done all the hacking they're gonna do. And they're essentially just trying to get one last payday before they go on to somebody else, basically.
Chris, some of the notes you had, just that actually leads to why we partnered with Arctic Wolf, because Arctic Wolf is providing our clients an ability to put in place an incident response plan, also help with continuous threat monitoring, because we want to try to bring something like that to our clients, because we know there's a lot of clients that don't have that today. So David, you want to just touch briefly on incident response plans and what you guys can do at Arctic Wolf, just briefly here for us?
Yeah, definitely. So we've been obviously singing the praises of an incident response plan. So when we thought, hey, what is a meaningful tool we can bring to Shepherd clients? It's an incident response plan. we didn't want to overcomplicate this. So through the Cyber Jumpstart portal that we deliver through our partners at Shepherd, you can essentially build a custom incident response plan for your organization. You'll define who your internal response team is, who your external response team is. You'll define some very basic things about your network, and how do you access it remotely? What type of servers do you have? What data do you have? Things like that any incident response firm is going to need to launch the most effective engagement possible. You'll define things like how you're going to communicate during an incident. Oftentimes, if you have a hacker in your system, you don't want to use company email because the hacker might be watching the company email. So you need to revert to things like personal cell phones and personal email. If you don't have those written down in a plan and you're trying to get all those on the fly, that's going to just delay your incident response effort from really being launched. So we're going to encourage you to document those things, and again, define your critical business functions all within that Cyber Jumpstart platform. And then the output is you actually get a PDF incident response plan that you can print out, keep in your glove box, keep in your safe at home, keep in a locked desk, have a physical copy of it somewhere, is really what I'm saying. Because when an incident happens, your network might not be accessible. So having a physical copy is a good thing. So that's one of the ways that we're going to help you be more resilient through these incidences here. We also talked about the causes of these incidents, these external exposure issues. Within Jumpstart as well, you can scan for vulnerabilities that lead to the most cyber insurance claims, and ideally get some things in place before that incident happens, or before you even go through underwriting. Patch up systems that are potentially risky, so that when you go through underwriting, you've essentially got a cleaner bill of health by the time Chris looks at you, and he can give you a thumbs up and send you on your way if you don't have any risky vulnerabilities that are present. We're spending a bit of time. We did spend some time talking about things like training your employees and things like that. It's worth spending some time talking about what some of those claims drivers are, because we do see that happen. It's more so an issue on the business email compromise side of the house than on the ransomware side. So on the ransomware side, external exposure really is what drives the claims. But on the business email compromise and the wire transfer fraud, social engineering fraud, things like that, oftentimes a user action is what causes the incident. A user does click on an email, click on a link that they shouldn't have, does open up an attachment they shouldn't have, something like that. So in those types of incidences, about 13-14% of the time, yeah, it is somebody opens up a phishing email. Again, a very common one is that historic compromise. That was that golf course example that I shared before. So one of the ways we can help companies deal with that is have something like a password manager in place. A password manager is just a tool that you install into your web browser that allows you to create very strong and very unique passwords for every online service you access. So in our world, we would have one for Microsoft Office, Salesforce, Slack, all the different online services we use to do our business. having a password manager allows you to have just an absurdly long and complex password that you'd never have a hope of remembering, but the password manager remembers it for you so that you can log in using these very strong passwords that are unique to each service. So that's one of the ways you prevent those historic compromise types of attacks that we see regrettably too often here. I think Chris can probably attest to this too. When we look at claims dollars that cyber insurers pay, ransomware is probably the most impactful risk to a business in terms of your operational life and your business interruption. But in terms of just raw dollars that get paid, business email compromise and wire transfer fraud is a huge loss driver. So getting some things like this in place to avoid those types of attacks, if we're worried about operational interruption, we worry about ransomware. If we're worried about just being on the hook for a giant bag of money, that's getting some of these things in place to avoid those wire transfer fraud and social engineering attacks. Those are just a huge loss driver, right, Chris?
They absolutely are, and yeah, those amounts can be incredibly large. I mean, we've seen multiple wire transfer, fund transfer schemes in the 7-figure range, and I think we'll probably talk about it a little bit, but once that money's gone, it's generally gone forever. It's overseas in the blink of an eye, coming from parts of the world that aren't necessarily friendly to us, and probably want nothing more at the end of the day than to get their hands on some of our money. Not a lot of spirit of cooperation among law enforcement agencies, things like that. So yeah, they tend to be very, very big.
Thanks, Chris. Thanks, David. Catherine, give us the next slide. There you go. And we actually kind of started to leak into this, speaking to claims and speaking to incident response. I'm actually going to jump to the second question because I think David and Chris really just answered that first question on how claims are different than other insurance claims and how they've evolved over time. Steele, you got any comments on most common threats and what those look like for our insureds, our clients?
Yeah, I mean, by far what I've seen are the ransomware and the business email compromise, funds transfer fraud. I actually had one yesterday, large healthcare entity in Mississippi. An accounting employee, their email got compromised. They sent an email to their client, another health system. They sent 2 invoices within a month. One was like $100,000, one was like $80,000, and they found out in August when it was due, it wasn't paid because the hacker, the guy went in and said send it to this bank, Citibank or whatever, and they sent it over there and it's gone. But the carrier paid out right away. They'll probably try to subrogate and get it back, but you'll usually see about a $250,000 sublimit for those claims. Going back to how things have changed, they were given $1 million full policy limits for cybercrime for a brief time. That didn't last long because these happen so often. So that's by far what I'm seeing as a broker. I probably see one a month, probably 20 a year over my book of business alone. So I'm sure the Burns brokers, we've got about 40 of us across the country, see a lot more. It's a lot. But ransomware, I've honestly seen that go down with the controls being implemented. But I've seen some large 7-figure ransomware claims.
Maybe a question for Chris or Steele, really, but it's not on the slide here. But do you guys see a common thread on the size of insureds that are being attacked? Is it larger clients that are being attacked? Is it smaller? Is it a mix? What's really everybody's exposed and at risk, but is there a common thread?
I see it all over. I mean, obviously like title agencies and law firms are targeted for that a lot just because of the amount of transfers that they do, but it really depends. I mean, we're seeing it all over the place. A lot of carriers are pulling back on, that type of cybercrime that they'll offer for certain classes, but yeah, I see it all over the place. Size doesn't really matter.
I would agree wholeheartedly. I think about 40% of the claims we see actually occur at companies with under 250 employees. One of the more common objections that we'll hear is that, a small company doesn't feel like they would necessarily be a target. They see the news and you hear about, these big organizations, retailers and tech companies and governmental entities that end up getting hit. And so they think that they're immune, but they're absolutely not. They're just as likely to have something happen as a large organization does. And it really impacts every industry at this point. As I mentioned earlier, we were initially probably spending more time underwriting to companies that were accepting credit cards and had large amounts of PII, but really, manufacturing, construction, transportation, any of the service type industries that Steele mentioned, real estate and attorneys, accountants, things like that. We're seeing claims come from about everywhere.
Yeah, and it's one point I'll add to that is if you think of this yourself, or if you hear your peers saying, I'm just a tool and die shop with 40 people in Fort Wayne, or I'm a Madison, or wherever you are, nobody's looking for me, nobody's trying to hack me. That's not how hackers hack. They don't open up the yellow pages. Remember those? They don't have the yellow pages and say, all right, I'm going after Madison Tool and Die today. That's not how they work. What they do is they find a system or a vulnerability. So they'll say, I know how to compromise this brand of firewall with this type of exploit, and they know they do that. What they then do, once they found something they know how to exploit, they'll scan entire segments of the internet. They'll scan, say, the entire U.S. internet, every single part of it, which is something they can do. They'll scan that looking for every brand of VPN or firewall that they know how to compromise. They'll compromise that firewall, and only after they've compromised the company will they realize who they've compromised. So they're not looking for companies, they're looking for vulnerabilities. And after they've compromised that company, they kind of poke their heads up out of the ground like a prairie dog, and they might be in a pizza shop, they might be in a home builder, they might be in Equifax. They don't often know where they've hacked until after they've hacked them. So you're absolutely right. Nobody is looking for you. That doesn't matter though. They're looking for vulnerabilities that you may have. So it's a mindset shift I'd encourage you to make. It's not about who you are or what your business is. It's about, do you have an internet-facing vulnerability that somebody knows how to attack? And if the answer is yes, and the answer is probably yes for 99% of businesses, then it's worth having a conversation about how do we clean up our external exposure and how do we transfer and share some of that risk with our insurance carrier.
Thanks, David. David, anything as far as how claims have evolved over the last couple of years? I mean, anything else to add there?
Yeah. I'll piggyback on something that Steele said earlier. We have seen the ransomware claim world get shaken up a little bit over the past, say, 12 months or so. It's the number of claims we see where there is actual ransomware, where the data is locked up, that is trending down ever so slightly because of things like EDR and MFA that make launching those attacks more difficult. What we have seen rise, though, in its place, though, and this isn't to say that ransomware is gone, it's certainly very prevalent, but it's, instead of being an 800-pound gorilla, it's a mere 600-pound gorilla. So what we're seeing rise up to sort of take some of that market share, if you will, is an attack that essentially tries to do the same thing as a ransomware attack, tries to pull sensitive data out of the network and then hold that for ransom, but doesn't actually go through the step of locking up the customer's network. So there might not be an encryption event. There might not be, you might not have that operational interruption, but you might have really sensitive financial documents or customer confidential information or sensitive human resources files. That might be what they take, and they say, if you don't want us to share your employee misconduct investigative data, you pay us $500,000 and we'll keep that private. So that's a little shift. I mean, the client is still being held for a kind of ransom, but it's not necessarily for paying for a decryption key. It's just for not publishing that data. Hackers aren't always good at identifying what is sensitive data, though. For example, we worked a case for a publicly traded company where they stole all the financial records, and they said, "Oh, we got you now. You got to pay us $1 million." And the company's like, "We're a public entity. We're going to publish that anyway. So bye." So if hackers get better at understanding how American business really works, then we might be in for a world of hurt. Until then, though, it's kind of luck of the draw on what they're able to actually get. Sometimes it might be sensitive. We had one case where the hackers stole a file, and the only file they got was a folder full of like pictures from the office Halloween party, which might be sensitive for a whole lot of other reasons, but from like a business risk perspective, yeah, it's not that big a deal.
Thanks, David.
Yeah. Yeah.
And
so
kind of what you're speaking to there.
Yeah, exactly. So when we work these cases and we source these stories that we tell, it's good to just call out, a question that we frankly all get very often is, so like, after we're done with the investigation, like, do we hand that off to the FBI and do they go arrest the person that did it? How often are people actually caught doing this kind of thing? Almost never. It's very rare. Every now and then you'll hear about a certain group that maybe had some of their tooling seized by the FBI. Like last week, there was a group called Ragnar Locker. You don't need to remember that name, but it was a win for the good guys. The good guys were able to take down one of the bad guys. But when we look at this, the US just dominates the victim market, if you will, for a cyber risk. And then when you look beyond that, it really is the global West. It's the UK, Canada, Italy, Germany, France. Russia has a little space on that pie chart. Australia has a little space on that pie chart. But that, who you don't see listed here, that's a good indicator of maybe who's launching some of those attacks. The fact that Russia has space on the pie chart is a little surprising to me, but they get a little bit. But more often than not, the groups that are launching these attacks, like Chris alluded to earlier, are ones that we don't have good political relations with, that we don't have extradition treaties with. So that if I'm sitting over in Moscow, I can launch these attacks, and I know that nobody in Moscow is going to ship me to the US to serve prison time, because because of all the reasons. So it gives you a little sense as to who might be launching some of these attacks. I oftentimes, like we said, the insured does get really worked up. They want to see some kind of justice brought to these people, and I do too. But at the end of the day, finding out who actually launched this attack isn't actually that relevant of a piece of information for you, because it's not going to change how you defend your network. It's not going to change how you respond to the network or respond to the incident or anything like that. So I'd encourage you to, obviously avoid these things as best you can. But if they do happen, don't get so focused on the attribution piece, because ultimately that doesn't change anything for you. If it's this person or that person, that doesn't change how you respond to the incident, and that doesn't change how you prevent the next one.
Thanks, David. I'll touch on just briefly here the insurance process, and this is probably relevant for some of our clients, but I don't need to dive into this too deep. I know the one big question is what do clients struggle with in the insurance process and buying cyber? So two things that always come to mind for me. One, obviously there's an application process involved. Every carrier wants to have the application to make sure you have the controls in place. And sometimes those applications can be lengthy and sometimes cumbersome. We've had issues where some IT managers, they might not even know how to answer a question that's on there. So obviously applications are sometimes cumbersome and confusing. Another thing that can be a struggle is the terminology. So like I mentioned before, there's 200 carriers or something like that that are providing cyber insurance and providing policies to clients across, the world. The terminology, the issue is it's not the same and the uniform and standardized across each insurance carrier, and so that can be confusing to clients, sometimes confusing to all of us on the call, because one carrier might call it phishing, another carrier might call it social engineering. It's not uniform like it is on property and general liability and business auto coverage. So that's something that can certainly be confusing. And so how and where can we help with this confusion? So that's why we're all here. That's why we're on the call today. That's why we all want to be advocates and extensions of your team. We're here to help. I'm sure Steele almost every single day is probably being asked to do a coverage comparison from Travelers to, Westchester. How does their cyber coverage, how does their policy differ? A lot of times we have to translate as agents, as brokers, as wholesalers, as carriers. We have to translate to our clients what's the difference in the coverage, what's the difference in the terminology, and try to clear up the confusion. So that way you can be confident that you're buying a better product, you're buying enough coverage, you're buying the proper coverage to protect you whenever you do have one of these claims or these incidents happen within your organization. So that wraps up our kind of predetermined questions or topics. I'm curious if we got any questions come through on the chat, Catherine.
Yeah, so I can go through those. We're going to open up the floor for questions. So if you have something that you want our presenters to address, if you haven't already, please go ahead and use that chat feature and drop them in there, and we can touch on those topics. I can start us off with the first question. How do I determine whether Oh, I'm sorry, I'm reading the wrong one. How are cyber claims actually paid? And do carriers decline them regularly?
Yeah, I
Chris,
think
you want to take that one?
what's up, Briggs?
Chris, do you want to take that?
Yeah, I certainly can. Or David, if you had thoughts there you wanted to share.
You go first. You actually work for a carrier, and I'll back you up.
Sure. I'll say that it varies. You know, as a insurance product, as Steele alluded to, it's still relatively young. There's not a lot of consistency in the market in terms of what different carriers call the coverages and how they go through the claims process. Speaking for travelers, I think, and as a shameless plug, we have a fairly important policy provision that allows us to pay these costs on behalf of our insureds. So, you know, if a victim of a ransomware event is in the position of having to pay, you know, $1 million ransomware payment, we will actually take care of that. They won't have to front that money and make that payment, and then wait to get reimbursed by us. Same thing when it comes to the you know, the cost to pay Arctic Wolf to help come in and figure out what happened and why did it happen and who did it happen to, and sort of plug the hole in the boat. So yeah, it's a you know, from a claims standpoint, if something were to happen, our insureds would have access to a phone number that's staffed 24 hours a day, 7 days a week, where they can get in touch with a claims person who's there to immediately help them start to kind of triage the situation. And that's a lot of the value of the policy, not just in the amount of, you know, the limit, the policy limit that you have available, but access to the professionals that can help you, you know, navigate this type of event, breach coaches, you know, law firms that can help you figure out what your legal obligations might be, you know, accounting and forensics experts that can help you determine the severity of a business income loss, you know, tied to an event. So yeah, there's a lot of things that go into it, and again, that's where a lot of the value for the policy comes into play.
Yeah, so what we see as we're a claims vendor for the insurance industry. What we see is that if a claim is ever denied, it's almost always because the client didn't purchase some coverage part that would have covered that particular claim. So, for example, if you're working with a carrier that maybe offers, you know, your ransomware coverage, your business interruption, that kind of thing, but you have to check a box to add on social engineering coverage, and you failed to do that and have a social engineering claim, the claim isn't denied for any other reason than you didn't buy coverage that would have covered that claim. So that's the most common reason we see that claims are denied in our world, is that the client, you know, didn't get proper advice from their broker, or they declined coverage. I was working with a broker yesterday. The client was offered cyber insurance in May. They signed a form saying, no, I'm good, I don't need it, and they got hit with a ransomware attack yesterday. So that's, you know, if they file a claim with somebody, well, it's going to be denied because you didn't purchase any coverage. So that's the most common reason there might not be coverage for a claim, is that maybe they weren't properly advised, or they declined coverage for something that would have covered that particular incident.
Thanks, guys. Catherine?
Great. Yeah, we got another one. Can a company get their money back after they've sent it via a scam wire transfer?
Oof, assume no. Really assume no in those situations. There's a very narrow sliver of instances where if you recognize that, like if you sent the wire transfer and within 5 seconds realized, oh dang, I shouldn't have sent that, and you happen to be buddies with somebody that works at like the FBI cybercrime office, there's a small chance you might be able to pull those funds back. You don't want to bank on that. That is an incredibly narrow sliver of instances where you're able to claw back those funds. But, you know, if there's say an intermediary bank before the money goes to Timbuktu, maybe there's that chance, but you don't want to bank on that. I say that as somebody who works in the cyber incident response business. I say that as somebody who worked as a banker in a former life and sent wire transfers all day long. The rule that was pounded into us from the very first day of banker training is assume that the moment you hit send that money is gone forever. That is what bankers are taught. And that had nothing to do with cybercrime. That just has to do with the permanence of the global wire transfer system. So there's like I said, a very narrow window in which you maybe can claw that back, but you don't want to rely on that as part of your risk management strategy, is what we meant. I'd say.
I've kind of got a caveat to that question, I guess. So like, and maybe Steele and Chris, you could answer this, but like, I guess, how important is it for our clients and like immediately whenever they think there is a hack or something wrong within the system, how important is it for them to not necessarily file a claim, but report there's an incident? Like how critical is that?
I'd say very critical. You know, immediately contact your broker, the carrier representative, the 1-800 number, and get somebody on the phone to talk through it. I don't think there's any harm in reporting incidents on on loss runs. Some people think they don't want that to show up in the future. I'd report it every time. I think time's of the essence for these things, especially with the business interruption component and time element piece of the coverage. That's just me.
I would agree 100%. I think there's probably a common fear on behalf of insureds that even if they don't think they have a serious issue, you know, they might not want to report it because they don't want their premium next year to double. I can tell you from an underwriter standpoint, if you report something to us and it turns out to be nothing, that's not going to have a negative impact in terms of how we think about your next renewal. We'll take that into consideration. It's always better for you just to go ahead and let us know, even if it turns out to be nothing serious. I think I wanted to add something really quickly too to David's commentary about the money sort of just being gone once it's gone. Universally, and maybe even it's 100% of the time, ransom payments are made in cryptocurrency, generally Bitcoin. This is what the bad guys want. It's untraceable. I was hopeful a couple years ago when the Colonial Pipeline attack occurred that we might start to see some change in terms of our ability to recover some of those funds. I think in that particular case, the government was actually able to go back because they had the private key of the ransom account. They were able to recover some of the payment that was made during that event, but it doesn't seem like that's become a theme yet.
I think the amount of work it takes to accomplish so the FBI was able to claw back some of those funds for Colonial. That's a very labor intensive process. And you look at that one attack, a good rule of thumb for the folks on the call is for every one cyber attack you see in the news, assume probably about 40 or 50 happened that you never heard about, probably even more than that, frankly. So in that situation, there's not enough people at the FBI to do that on an insured by insured basis. So it would be ideally that kind of thing would happen, but it's just operationalizing that would be just next to impossible.
All right, thanks guys. Since we're getting a little close on time, I think we should wrap up the questions, and any other questions we can address those after the fact. We can get back to you guys if you have more. But yes, we can move on.
Thanks, Kathleen. Yep. David, you want to touch on takeaway as far as Arctic Wolf and your guys' Cyber Jumpstart portal?
You got it. So this is something that we work with Shepherd to make available to you. So earlier we talked about the ability to identify the external vulnerabilities in your network that we know threat actors like to use for ransomware, and we talked about the importance of having an incident response plan. We didn't overthink this. We just gave you the ability to do both of those things. So if you follow that link there, or talk to your Shepherd advisor, your account manager, your agent, they can get you this link as well. If you follow that link, you can create your account on Cyber Jumpstart, and you can begin scanning your network right away. Today, you can begin building that incident response plan so that you ultimately have a more resilient environment. And it's something that we make available to you to help manage that risk. So click that link and you can follow through to there.
Thanks, David. And we put the link in the chat as well. Also, we'll have the link to set up your Jumpstart portal and any follow-up communication we have along with the recording from today's session. So if you have other questions, like I said before, don't be afraid to reach out. We've got an email address here if you want to reach out, info@shepherdins.com, or you can obviously contact your dedicated account team at Shepherd Insurance. So please reach out for questions. Reach out even if you're not a current client and you want us to review your coverage, help with advice, and because we're here to protect you, and that's what we want to do. So, yeah, Catherine, you got any other wrap-up items here?
I do one more. I want to thank you to our presenters and our attendees for being here today. As mentioned earlier, the recording, the slide decks, any other questions will be emailed to the email you registered with and in the follow-up email after this. So be on the lookout for future webinars from Shepherd. Thank you again, and have a wonderful rest of your day.
Thanks, Catherine. Thanks, everybody.
Thank you.
Bye now.